Good afternoon, ladies and gentlemen. Today is Monday, the 7th of May, and we are glad to present you our weekly analytical review of the foreign exchange market. Last week, the pair EUR/USD continued its decline, having fallen to the level of 1.1930. If the price consolidates below this level, it will give the prospect of further decline to 1.1830 mark. The level of 1.2020 is seen as the key for the bulls, coinciding with the Fibonacci correction of 23.6%. If it is broken through, the growth may continue to 1.2085 and 1.2150. Technical indicators show mixed signals. Bollinger Bands are diverging, confirming the downward trend, and MACD histogram is growing in the negative zone. Stochastic is trying to leave the oversold zone and form a buy signal. Fundamental events of the week include the data on the US Consumer Price Index, the volume of industrial production in Germany, as well as the speech of ECB President Mario Draghi. Generally, the continuation of the decline in the breakdown of the level of 1.1930 seems probable, but one cannot exclude the beginning of growth. The pair USD/GBP fell below 1.3585 mark and may continue the decline to the level of 1.34, which coincides with a Fibonacci correction of 38.2%. In case of a reversed breakout of level 1.3585, the targets for growth are 1.3730 and 1.3850. Technical indicators show mixed signals. Bollinger Bands are diverging, confirming the downward trend, and MACD histogram is growing in the negative zone. Stochastic is trying to leave the oversold zone and form a buy signal. Fundamental events of the week include the Bank of England's decision on the interest rate, as well as the publication of data on the volume of industrial production in the UK. Generally, the continuation of decline is possible, but one cannot exclude a growth in the breakout mark of 1.3585. The pair USD/JPY showed mixed dynamics last week. After growth to around 109.90, the price corrected to the level of 109. Its breakdown may lead to a further decline to the area of 108.35 and 107.80 marks. Still, the price may resume growth to the levels of 109.90 and 110.50. Technical indicators show mixed signals. Bollinger Bands are pointing upwards. MACD histogram has started to decline in the positive zone. Stochastic is pointing downwards. Generally, the resumption of growth seems more likely, but one cannot exclude a decline if the price is consolidated below 109 mark. The pair AUD/USD showed mixed dynamics last week. After the decline to 0.7470 mark, there was a correction to the level of 0.7560, which coincides with a Fibonacci level of 50%. Its breakout will give the prospect of growth to the midline of Bollinger Bands to 0.7640 mark. The key mark for the bears will be 0.75. If the price consolidates below it, a decrease may continue to 0.7435 and 0.7370 marks. Technical indicators show mixed signals. Bollinger Bands have reversed downwards. MACD histogram is stable in the negative zone. Stochastic has reversed upwards. Fundamental events of the week include data on retail sales in Australia. Generally, to enter the market, it is necessary to wait for the breakout of key marks of 0.7560 or 0.75. Last week, the quotes of gold showed mixed dynamics. After a decline to 1303 mark, there was growth to the level of 1313. Further growth may continue to the midline of Bollinger Bands to the area of 1328. Reverse breakdown the level of 1313 will give the prospect of a decline to 1303 and 1295 marks. Technical indicators do not provide a clear signal. Bollinger Bands are reversing downwards, MACD histogram is stable in the negative zone, Stochastic is pointing upwards. Generally, if the price consolidates below the level of 1313, the continuation of the decline seems probable, but one cannot exclude the beginning of growth. That's all for today, and good luck with your trading!